Let's now connect with Suresh Mahadevan, Managing Director and Head of Equities with UBS Securities. Suresh, morning. Always a delight to have you back on ET Now. Suresh, how disappointed were you by Reserve Bank of India's Monday's policy announcement? Do you think if the end endeavor was to really, stem the rupee fall, the Reserve Bank of India has done precious little to do that?
See, clearly, I think, there were some expectations of action from the government, which I think was not enough, perhaps. But, I think the bigger picture is that, economic growth is clearly slowing. And I think it seems to me that expectations may still need to come down, which is what the currency market is kind of reflecting, like high inflation, low economic growth. Whereas the stock markets have, I think, been hoping of some measures from the government, which I think, whatever measures came out yesterday were not probably good enough for the markets. So our view is that, markets will continue to be challenging for the next 2 to 3 quarters. And, we then see how we go from there.
Suresh, hi. So what lies ahead for the next 4 to 6 weeks? Do you see the market trade in a narrow range till a new finance minister is selected, or do you think it's going to be a leg down or range bound move?
See, first of all, I don't think why the market goes up from here. That is number one. Because, I don't think there is any reason for re-rating unless the government really does a U-turn in terms of what they're doing with reforms. Secondly, I think, most people believe it's going to be range-bound, which probably is a possibility. But I also won't rule out a possibility where I think, some foreign investors sell India, and then, we see a big kind of down move, like, 10% kind of down move. That's also a possibility. So I think it's either going to be range-bound or probably going to have a down move, I think.
Suresh, does your hypothesis also, factoring in a lower monsoon?
No, I think, that is a random variable anyway, which I think has a possibility. It's highly likely that we have a decent monsoon, I think. Though I think there have been some kind of opinions out there with the El Nino and all, monsoons could be affected. But my sense is, we are not building any bad monsoon into our kind of scenario. I think our analysis is reasonably simple. I think, the government expects the economy to grow at 7% and therefore attract a lot of capital. But I think, we are not going to grow at 7. We are probably going to grow at 6 or sub 6%. And therefore, for us to attract capital becomes that much of a challenge. So I think that essentially is the problem, I think, economic growth expectations need to be reset. And therefore, I think, you could see a next few quarters of very challenging markets.
So, Suresh, what could be the trigger of the leg down for the markets from here onwards?
I think it's going to be pure selling. I think, foreign investors haven't really sold because I think they have been taken by the sharpness of the rupee move, and they feel, okay, Indian stocks are pretty attractive because, they are trading well below historical averages. But sometimes I think, the momentum is important. And as you very well know, I think inflation readings have been higher than expectations. And economic growth, both the data points and the expectations, have a downward bias. So I think at some point, some of the gem investors might say, look, you know what, let's try to get out of India once, and then we'll come back when the data points start looking more promising. So that is a possibility. But, it's primarily dependent on actual selling coming through, I think, more than just sentiment.
Suresh, so what is a good strategy for investors, and what are you advising them that how should they be positioned in this current environment?
See, we are not basically advising people to exit India because we still believe in the structural story. So if you believe in the structural story, the next 12 months could be quite a good opportunity to buy into specific names. plus, for India dedicated funds, which have no choice but to invest in India, we are advising a defensive kind of positioning, which is consumers, pharma, defensive power, telecom, things like that on the overweight side, and underweight most of the cyclicals, right? Banks or real estate, or we have very little weight on oil and gas, petrochem, etc. So our top ideas will be stocks like Federal Bank, Hero Honda, Infosys, ITC, Idea Cellular, and maybe on the mid-cap side, TTK Prestige. So those are some of the stock ideas we are pushing. So we are advising a defensive positioning for the next 2-3 quarters before, I think, clarity emerges on what the government would do, as well as we have the expectations kind of reset on economic growth and hence earnings growth.
Right, Suresh, the Europe commentary scares you, and that could, sort of add on to the probability of a sell-off in India. That is what some market participants feel. What is your take?
No, not really. So look, I think the global situation is something you and I or anybody has no control over. But having said that, obviously, risk is on, then India is doing relatively better. But my worry is, forget the global situation for a second, right? Even India-specific fundamentals are not very good, right? There are certain issues. So even let's assume that, things in Europe get resolved over the next month or so, even then, I would suspect whether India will outperform the other global emerging markets. It may not because of its weak fundamentals, I think. So I think that is the real worry. I think the India-specific reasons are what worries investors right now.
Suresh, in the near term, are you worried about global selling? The fact that Indian currency has broken down, and for institutional investors who are now investing in India, I'm sure they are worried about their investments.
See, my sense is the valuations are at our side, and we are also relatively under-owned versus the benchmarks, I think. Now, given that is the case, I don't really see like a correction beyond 10-15%, 10 to 15% at the most. We are at around 12 times earnings. Can we go to like 10.5, 11 times? Perhaps we can in selling. But what causes that selling? I think things will have to get a little worse from here. I think because, already what is there out there is in the price. But, if data points continue to worsen, then I think we could see a sell down. Because there is close to $200 billion in Indian equities, I think, give or take a few percentage here or there. So I think, these people are still hopeful that India continues to do well. But, if data points continue to deteriorate, at some stage, things could become a little, more downward pressure, perhaps. But, what I think is either you have that situation where the market goes down 10% in the relatively short period of span of the next 2-3 months, or alternatively, you will have the market trade in a tight range. But, given we are growing still earnings, so it's like a time correction. So either or is probably the most likely scenario. I don't really think that the markets go up in a hurry because, neither are returns on equities going up, nor is the, data points, nor is earnings momentum turning. So there is a lot of reasons why the markets may not go up in the short term.
So, Suresh, what is it that you're expecting from the RBI after, a status quo policy last time around? Can we expect aggressive cuts in rates in the near term?
See, the issue the central bank has is, it has to walk a tight rope between inflation and growth. And I think clearly in the last interest rate cut of 50 bips, I think the RBI made its stance pretty clear around inflation needs to come down a lot more before it can cut more. So frankly, we were not surprised when the RBI left the rates unchanged, though we thought, some CRR cut was kind of warranted to basically take care of the liquidity. But my sense is there is very limited ability for the central bank to do anything. And I actually think it's a great thing that the central bank is not defending the rupee, because a competitive currency is actually quite good for India, not only from an exports perspective, but also, discouraging imports. In a capital deficient country, I think a competitive currency is quite a good thing to have. because, as and when things turn, I think a competitive currency will also attract a lot of flows. So I think, the central bank has done a pretty good job. I think it's the government which, needs to get its act together in the coming months to ensure that, economic growth resumes.